What's happening, guys? Welcome back to the channel, and in today's episode we are going to do a market outlook for the week ahead. Today is the 8th of April, and if you guys are trading any of the three major currency pairs, Euro USD, GBP JPY, and of course gold, which is XAU USD, make sure you guys stay till the end of the video because we are going to give an analysis on what we believe the market is looking to do over the next few days, where you guys want to aim for in terms of your targets, your take profits. So stay tuned. As always, guys, very important that I let you guys know that I am not a financial advisor and nothing in this video should be taken as financial advice. Trading is risky and you can lose all your capital. So please make sure you guys are not trading with money that you cannot afford to lose. If you guys do get value from today's video, go ahead, click the like and subscribe button, hit the notification bell, and any questions, comments that you guys have, whether good, bad, or otherwise, make sure that you leave them in the comment section below and we will get back to them as soon as you can. Now, this is the first of many video series between myself and Curran. You can find both of our IG links in the description section, as well as both of our Telegram links. And it's our goal to provide you guys with as much value as we can in the Forex markets through this series. So I'm going to pass it over to Curran and he is going to kickstart with his analysis of Euro USD.
Great. Thank you, James, for having me. So guys, let's jump right straight into it. So Euro USD is a very hot pair. Now, in order to trade it, we always want to mark it. If you're a day trader, go onto 15 minutes chart and then just mark it from where the market has previously been, the lowest point and where the highest point is. So after you've done that, these are the zones that I believe are good zones to trade based on. Now, if you can see, there's a zone here of 0.236 and 0.136. This basically means from the bottom of the market to the highest point, this is the position where it's standing at right now. Now, these are the zones where you don't want to trade. You want to stay away from these zones because this is where people get trapped. This is where a lot of people think, oh, okay, it's going to go up, it's going to go down, and they start gambling. You don't want to be that person. What you want to do is you want to wait. Once it breaks this zone, okay, now it can break either way. It can go, let me just draw it so it's easier for you. So as you guys can see, it's right in the middle. Now, if I get a brush here, so if it goes below this, let's say it goes here, you don't want to enter straight away. You want to wait. You want it to break the zone of 0.23% recovery, retest that, and then not straight away enter. Wait for the first candle. That can be a red candle. Then the second candle, that's on a Heikin Ashi candle, flat top, will be the confirmation for you to enter. Now, your first take profit can be a EMA of 200, okay? Then you can wait. Once it again breaks that, retest 200 EMA, carries on, this can be your TP2. And then if it again breaks that, retest at this point, it can be, the take profit 3 can be 60% market recovery in a downward trend. Now, at the same time, if it breaks upwards, now you guys might be thinking, Curran, what if it goes higher? What do we do then? If it goes higher, it breaks that, retest, and again, wait for the first candle, it needs to be green. Then the second candle with a flat bottom in green that closes will be your confirmation, and that will take you to your first TP, which can be the highest position in the previous point in the market. And then just like that, you can carry on 15 to 20 pips if your market's carrying on in the same direction.
So
that is how.
So Curran, what you're saying is basically wait for the market to give you evidence and let the market come to you. And you're using a break and retest. So can you just explain for people that don't know the difference between Heikin Ashi candles and the normal candles that maybe you get on MT4, or what is it specifically that they show you that you're looking for, and you know why you use Heikin Ashi?
Sure. So a lot of the traders who are beginning use normal candles, and banks and hedge funds, they already know that. They don't want to let normal people win. So what they do is a lot of hedge funds, a lot of big firms, they use Heikin Ashi candles. Heikin Ashi candles give you a clear-cut picture of what's the direction of the market and what the direction wants to do. What's the market's plans? What's the way, the direction that the market wants to follow? Now, not a lot of people know about this. The Heikin Ashi candles are very least used. They are very clear cut. They are used by big trading firms, big companies, and they don't really give this information out. But because we educate ourselves, we found this information out and we use this. So that's what is the difference between a normal candle and a Heikin Ashi candle.
So, Karan, when we were trading last week, Euro USD, you were talking about the importance of the last 15-minute candle of the hourly candle. And you mentioned that the first 15 minutes, it doesn't really bear any relevance. So when you're entering trades yourself, would you be then entering on the last 15 minutes of an hour, or where would you be looking to enter in a candle?
So that's absolutely correct, James. I always focus on the last 15 minutes of the hour. Now, that doesn't mean that we have to ignore the entire 45 minutes of the entire hour, but I strongly believe that a candle, the end of 1 hour, the last 15 minutes is when you get the most confirmation, the most information of what the next move of the market will be. Now, for the first 45 minutes, the market might be in consolidation where it's not really going anywhere. It's like up and down, up and down. When the last 15 minutes, the last 15 minutes come of the hour, and then the candle closes at a flat or either downwards or upwards, that is a strong confirmation for me for the next hour to start in that direction.
So just to confirm, just to summarize for everyone that's watching, the zone that Euro USD is in right now between 0.236 and 0.136, you would not enter that zone for a buy or a sell. You're looking for it to break above and then retest for a buy with a TP above, or break below, retest, and then sell with a TP below.
Absolutely correct, James. I would not want to risk and be stuck in that zone, because this has been tested multiple times in the past. This is a zone where a lot of traders jump in thinking, okay, this is going to go up now for sure. No, it's not. 13% and 23% recovery is just a zone where banks, hedge funds, and everyone try to trap all the traders. So I would recommend everyone to stay away from this zone and carry on after it has broken that zone in either direction.
Perfect. And I know from myself, from experiences, when you enter a trade in that zone, that's when you end up stuck in a trade for a long time. If you want to get in and out the market, collect your pips and run, you want to wait until, the move has started. You don't want to be in for hours while the market is playing tug of war. So let's move on to GBP JPY and let's see what's going on with GJ.
Wow. Okay. So very, very interesting. It's that time of the day. Again, it's in a zone where I would want to wait.
And this is normal on a Monday, by the way. It's the start of the week.
Absolutely. Yes, absolutely. Monday basically formulates the entire plan of the upcoming week. So this on a Monday is very normal. By the end of Monday, this can decide which way and what is the market going to do. So it's better to wait, because you don't want to trade every day. It's quality over quantity. So you want to wait. You want to again get the same confirmations that we've just spoken about in Euro USD. Let it break below, retest. Let the first candle play itself. Then the second candle, if it's a flat bottom, let it go to your first TP. That will be the aqua line of whichever one is the closest one. Then the second TP will be 61% recovery. Then 50% will be the next one. Now this has been marked, of the Fibonacci of this has been marked from top to bottom, guys. You don't, every time the Fibonacci is not marked from bottom to top. Now, if the market's going downwards, we will mark it from the top to bottom. And again, whatever zone it is in, we will trade based on how it reacts from there.
Okay, perfect. So for anyone watching, can you just tell them the significance of the 618? The 618 with Fibonacci is like a magic zone, right?
Absolutely correct. So 618 is, a lot of traders call it as a God's number. So in your body, whatever body part is yours, everything is 61% off. If you measure half of your arm till your elbow, it's 61% of your entire arm. Same as this is very crazy, but this is scientifically proven fact. So it's the same in this industry. Whenever something drops down or goes up, it always recovers 50 to 61%. This has, you can test it over and over again. You can go back in history on any chart and you can see whenever there's been a big pump, there's always a drop to 50 or 61% and from there it predicts or decides wherever it wants to go further.
Perfect. So with GJ again, we're stuck in a zone right now. We're either looking for a break above and a retest to buy, or we're looking for a break below with a retest to then sell. So let's go take a look at gold, okay? XAU USD. This is the most traded commodity globally. This is the one where traders make the most amount of money. It's the one where traders lose the most amount of money. Now, gold has been on an aggressive run, you know, as the dollar gets weaker, you know, inflation, you know, global crisis, all these things cause gold to just go up in price. And it's been on a rampage. We saw earlier today that it even made a new all-time high, you know, nearly 2360, which is crazy. So where are we at right now? It looks like it's losing a little bit of strength. It looks like it wants to come and retest potentially that 618.
Yes. So this is a very, very interesting place for gold right now. It's exactly what we've just discussed on USD and GBP/JPY. So as you guys can see, we've marked from the bottom to the highest because that's where the trend has been, and then it basically dropped down and it went into the zone where we don't want to enter. Just as we mentioned, if you guys entered in this zone, you would have been stuck. Can you guys see? A lot of traders were probably stuck here for a very long time, getting frustrated, trying to understand, okay, it's gone up, I need to close my trade, then it's gone down, oh, I need to close my trade. That is the zone where you want to avoid. That's exactly what we just spoke about in USD and GBP/JPY. Now, what it did, it went down, it broke the zone, it retested, and James, we might be able to see a big drop while we're here, or it might take a bit more longer. As you guys can see, it's exactly done the same thing. So the first candle came, and the next candle was flat top at 30. And it's already dropped to 25.
So what's interesting, like you said, that was the last 15-minute candle of the hour, I think, and now a new candle's just opened. So say, for example, I just came to the market right now, 23.25. Would I sell down to, you know, the 50% zone or the 61%, or is it too late now?
So you need to wait now. Because now the next 15-minute candle has started. Once it has now, so this gold is very, very different as compared to other currency pairs. It moves really fast. So what we want to do is first, it was the flat bottom came, we enter quickly, we get here, now we move our stop loss to entry. That's the first step. If you've already entered, that's the first step. Now, if you've missed it, what you want to wait for is for it to break the previous low. So wherever the candle, the previous lowest point of the candle was, once it breaks, which it has, as we can see, it's broken, we will enter it. Now for this, our next TP will be 50% recovery, and once it breaks that, retest that, 61% recovery, and then we wait. We want to exit at that point. We don't want to be greedy, and then we want to see how the market reacts from there, and then carry on trading.
Okay, perfect. So gold it's the devil or it's an angel. It's one or the other. So if you're looking at the market right now, you haven't entered yet, you would not be entering gold until that candle closed below the wick of the previous low.
Exactly.
Okay,
exactly.
Fine. And where would you put your stop loss and why?
So the stop loss will be 0.23% recovery.
Okay.
Because once it goes back into that zone, that is not a ball game. Now the market can completely overturn whatever is done and then turn completely around. So that will be, as soon as, even if the market's going upwards, my stop loss will be 0.30. If it's gone below, my stop loss will be 0.23. I want to stay away from that zone. That's a death zone. I don't want to go.
Sure.
That will be one.
So I can see that you've got Forex Factory up. Can we just quickly take a look? Maybe refresh it if it needs refreshing. So that's the back end of last week where we had NFP. So today, not much happening at all. So it's probably going to be a consolidation day, very little going on. What have we got on Tuesday? Again, very, very little. So it's going to be a very quiet day. These are probably days to stay away from the market. Wednesday, what have we got going on? Let's have a look. Okay, so now the market starts to liven up. Okay, so you can see straight away CPI on Wednesday. This is a minefield. Okay, CPI is probably one of the the biggest news announcements that creates the most amount of volatility. So this is where we're going to see most of the movement at 10 p.m. Just check your time zones as well, by the way, because me and Karan currently are both in Dubai. 10 p.m. we've got the FOMC meeting. So this is a day, to be honest, to stay out the market. It makes no sense to trade on these days. So let's have a look at Thursday and then we'll wrap up, of course, on Friday. So Thursday, again, lots and lots of red folder news announcements. So stay safe when you're trading. Make sure that you try and exit your trades before or put your stop losses to entry for any trades that are in profit. And then last but not least, on Friday, we have not too much going on, to be honest. So that's our weekly outlook, guys. Make sure you stay safe. If you guys want to stay connected with both of us, then we have Telegram channels where you guys can get daily trade ideas. You guys can get daily trading value. Make sure that you follow both of us on Instagram. I'm going to leave our tags in the description for this video. If you can, like and subscribe to our channels. Make sure you share this video with your community. We really want to provide as much value as we can, and we're looking forward to helping as many people navigate their way through the Forex markets as possible. So thank you guys for watching, and we'll see you next time.